Welcome everyone. Welcome to the day 3 of the TX session. And first of all, let me share you the agenda for today's discussion. I shall be covering the things with respect to the income taxes, like the questions which are pertaining to section A and section B type questions. But as we are going to cover section A and B type questions, before that I have to cover 2 to 3 discussions. After that, I would be taking your queries, and then finally we shall be start practicing new questions which are not there in your exam kits and which you have never basically attempted in your earlier preparations. Let me write the agenda for today's session. First of all, I will be discussing the first thing which I'm going to cover in this session is the discussion of chargeable accounting period for large companies and also the payment on accounts for large companies. Thereafter, basically, you can see this topic is pertaining to corporation taxes. We have to discuss the payment on accounts for large companies. The second agenda is with respect to the individual person. And if you remember, at time of starting a new business, we have to apply some basis period rules, at time of starting new business. So this topic is pertaining to the income taxes, like the taxes of individual person. Thereafter, I shall be covering a concept named as business asset disposal relief. And this topic is pertaining to capital gain taxes. And after that, we shall be covering a relief named as investors relief. So investor relief is another aspect with respect to the capital gain taxes. So the main agenda of today's session is to discuss these 4 things first, and then we shall be moving towards practicing questions. So if you are unclear with the agenda, you may please ask. First of all, we shall be discussing how and when a large company would be paying any tax amount. Second thing, the basis period rules for individual person at time of starting a new business. Thereafter, business asset disposal relief, and another relief, the investors relief. So I'm looking at the chat box, and if you guys are okay with the agenda, if you are clear with the agenda, discussion agenda, so then we can move forward. I want your active participation in this session, because it should not be a one-way communication, it should be a two-way communication. So would appreciate your active responses, your active replies in the chat box. Should we start our discussion? All right. Okay, good enough. Let's talk about the first thing, and keep one thing in mind. All these things, all these discussions are very much important from exam point of view, and these are going to help you out for passing TX exam. We shall also be doing practice questions. Don't worry, Umar. After the discussion of few areas, we shall be moving forward towards practicing questions. Don't worry. Okay. The first topic for the discussion is, if you remember, when we talk about a company, so basically for taxation purposes, for paying taxes, companies are categorized into a small company or a large company. So companies are categorized as a small company and as a large company. Small companies are required to pay their tax. They make their tax payment. What is the rule? Do you remember? Small companies pay their taxes within 9 months and 1 day after the accounting period, after end of accounting period. So that's a basic rule for small company. Small companies are required to pay their tax within the 9 months and 1 day after the end of accounting period. But whenever there is a large company, so large company is required to pay tax in installments, and these installments are based on current year corporation tax liability. If you remember, for in value added tax, we do study a scheme named as annual accounting scheme. In annual accounting scheme, there are also VAT paid in installments. Number two, whenever we talk about the taxation of individual persons, so individual persons are also required to pay tax in installments. And same case with a large company is also required to pay tax in installment. The main difference, as we talked about installments in 3 instances. Number one, in VAT, there is a scheme named as annual accounting scheme. Number two, for individuals are also required to pay their taxes in installments. And number third, over here, if a company is a large company, so that company would be paying tax in installments. But keep remember one very much important point. These two installments, the installment which is paid under annual accounting scheme in VAT, and whenever the individual person is paying any tax amount, so these two installments are based on previous year amounts, whereas a company's installment is based on current year corporation tax liability. So that is the estimated corporation tax liability. Let me conclude my point. Basically, installments are paid at 3 different instances. Number one, in VAT in the annual accounting scheme, but that amount of installment in annual accounting scheme is based on the previous year VAT. Same case with the individual person. Individual person tax installment is based on class 4 NIC and the income taxes, but these two things should be considered from the previous year. But whereas a company is going to pay tax in installments, so that installment amount is based on estimated corporation tax liability of the current year. So that's the main difference between the installments for VAT, installment for individual persons, and installment for large companies. So these two are based on the previous year data, but for a large company, installment is based on current year estimated corporation tax liability. So here, the main agenda is a discussion of the installment paid by the company. So are you clear with this difference? Are you guys clear with this difference or not? I'm looking at the chat box. Are you guys crystal clear with the difference? Okay, now one of you has basically answered this part of the question. Yes, Daniel, you answered this thing. Large company is required to pay tax in 4 quarterly installments. Very right. So I'm going to continue my discussion from here. Now let's talk about large company tax in installments, and that installment amount would be based on estimated corporation tax liability. I'm not going to discuss how to calculate the installment amount, but the important discussion is for a large company tax in installment, these installments are
imagine 65.
A large company has to pay tax in installments, and that is to be paid in 4 installments. First installment, second installment, third installment, and basically the 4th installment is basically a balancing payment. I'm going to conclude different points over here to make you clear with respect to the corporation taxes and the large company and the tax in installments. What is the rule for the large companies? When this first installment to be paid, what is the date for paying the second installment, what is the date for paying third installment, and what is the date for paying the 4th as balancing payment? Remember the rule? Very right, Daniel, your answer is perfectly fine. It's starting from 14th day of 7th month, then thereafter 14th day of 10th month, thereafter the scenario remains same, 14th day of 13th month, and the last one, the balancing payment to be made on 14th day of 16th month. Perfectly answered. Now let's assume accounting period is, let's say, starting from 1st Jan 21 and is ending on 31st December 21. You may not one think that it's an accounting period for complete 12 months. So keep remember, according to this accounting period, what will be the due dates for paying installment by the large company? The first installment to be paid on 14th July 21, thereafter 14th October 21, thereafter 14th Jan 22, and the last payment as balancing payment will be paid on 14th April 22. Remember one rule, when the accounting period is, like you can see over, the accounting period is of 12 months. So there are in total 4 installments. Now I'm going to tell you very interesting point over here. If accounting period is less than 12 months, what will happen? Still we shall be paying 4 installments? Yes or no? My question is, if this accounting period is less than 12 months, what will happen? Still we shall be paying the 4 installments? Yes or no? Your answer is right. Ikra, your answer is no. Fine, that's fine. Let me create a scenario, then I will be asking few questions from you guys. I'm assuming now, let's say accounting period is starting from 1st Jan 21 and it's ending on, let's say I'm just assuming this date, on 30th September 21. So you can see is that accounting period is of 9 months now. Accounting period is of 9 months now. According to this accounting period, What will be the relevant dates for paying the first installment? First installment will be paid on 1st July 21. Second installment would be paid on the 14th day of 10th month according to the rule. It will be 14th October 21. Now, very important. This third installment will be considered as balancing payment. In this scenario where the accounting period is not equal to 12 months, in this situation, company is not required to pay tax in 4 installments. Your installments will go down if accounting period is less than 12 months. I'm just assuming it's, let's say if it is 9 months. So in this situation, when it was of 12 months, company paid for installment. Now it is of 9 months. In that scenario, company would be making tax in 3 installments only. And over here, third installment would be considered as balancing payment, which is to be made on 14th Jan 22. The rules, these dates will remain same for each situation. Are you guys okay? Don't worry, I would also be considering another situation wherein we shall be reducing the accounting period. Like as we reduce from 12 to 9, now we shall be further reducing it from, let's say, 9 to 6. Taking the same assumption over here, now next situation is for you. Let's say accounting period is starting from 1st Jan 21, and let's say now it's of 6 months ending on 30th June 21. Accounting period is now only for 6 months, and according to the rule, the first installment to be paid on 14th day of 7th month, which is becoming 14th July 21. Second payment. Before the discussion of second payment, let me guide you over here. Now, as we have further reduced the accounting period from 9 to 6 months, what's your suggestion? Whether there should be 4 installments, there should be 3 installments, there should be 3, 4, or there is a different in installments now? So keep remember, if the accounting period is of 6 months, then only 2 installments are to be made. And over here, the second installment will prevail as the balancing payment, and it is to be made on the 14th day of 10th month. So that is becoming 14th October 21. So what we can say is that, what we can conclude is that when the accounting period is of 10 to 12 months, then 4 installments are to be made. When the accounting period is of 7 to 9 months, then there will be 3 installments. If in any scenario, if accounting period is of 4 to 6 months, then only 2 installments will be made. Let me repeat again. When accounting period is of 12 months, 10 months, 11 months, or 12 months, in that scenario, large company would be paying 4 installments. When accounting period is of 7 months, 8 months, or 9 months, then the installments amount, total installments will be 3 installments. If accounting period is of 4 months or 5 months or 6 months, in that scenario, there will be only 2 installments. Another situation, and let's say accounting period now is only for 3 months, starting from Jan 21 and ending on 31st March 21. So basically, now we are assuming accounting period is for 3 months only. So what we can do is, right, if accounting period is for 1 month, 2 months, or company is preparing account for 3 months. So whenever there is accounting period of 1 to 3 months, in that scenario, what is your suggestion? Your answer is right. There will be only 1 installment, and that 1 installment will be the balancing payment. Your answer is perfectly fine, Daniel. I'm going to write over here, if the accounting period is of 3 months or 1 month or 2 months, in that scenario, there will be only 1 installment, and that one installment will be considered as balancing payment. So over here, according to the rule, now the first installment, the first installment will be considered as balancing payment, and according to the rule, it will be paid on 14th July 2021. So we have assumed multiple scenarios wherein the accounting period was of 12 months, let's say for 9 months, let's say for 6 months, let's say for 3 months. Then I have added if accounting period is of 10 months, 11 months, or 12 months, then there will be 4 installments. If accounting period is of 7 months or of 8 months or of 9 months, then there will be 3 installments. If accounting period is of 4, 5, or 6 months, then there will be 2 installments. And if a company is preparing accounts for only 1 month or for only 2 months or for 3 months, then there will be only 1 installment, and that 1 installment will be the balancing payment. Are you guys okay? Are you guys okay with these discussions? So if you guys are okay, then I can add one more point to this discussion. But before that, I want confirmation from your side. What about others? Your active responses would be highly appreciated, please. Daniel, for companies, we don't follow any financial year or fiscal year. Companies' tax payments dates are pertaining to their accounting periods. For companies, we are not bothered to follow the fiscal year or financial year. Your point, as you are asking, sir, if our accounting period is same as fiscal year, then our first installment will be on 14th October. So as you're talking about fiscal year, so this point is pertaining to the individual person taxation. Companies taxation and payments are not linked with the financial year or fiscal year. Companies taxation is simply based on the accounting period. Is this thing is clear? Okay. Now, another point, adding this thing, I would appreciate if you please check one very important point. When we assumed the accounting period for 12 months, the accounting end date is 31st December 21. From this accounting end date, check the time gap from this accounting end date till the balancing payment date. Can you please check the time gap? And we shall be checking this thing for each scenario separately. Same case over here. When we assume accounting period end date is 30th June, from this date, check the time gap between the balancing payment and the accounting end date. And same thing we'll be doing over here. Can you please check the time gap from 31st December 21 if we start counting? Jan 22, Feb 22, March 22, and like 14th April means 14th day of 4th month. No, it's not 4 months only. If you properly count, so these are becoming 3 months and 14 days. Or we can rephrase this thing as these are 3 months plus 14 days, or we can rephrase the same thing as 14th day of 4th month. There is no difference. We can say the time gap between the accounting end date and the final balancing payment date is 3 months and 14 days, or the final payment is being made on the 14th day of 4th month from the end of accounting period. So both are correct, both are same. Maybe this thing is written in kid questions, Maybe this thing is written in the study text or kit questions. So don't worry, these both are same. There is no difference. For each scenario, you can check the same thing. So basically, examiner can also ask from the accounting end date till how much time a large company has to pay its balancing payment. I repeat the question. From the accounting end date, what is the maximum time gap from the accounting end date till making the balancing payment? So your answer will be 3 months and 14 days, or we can say it as 14th day of 4th month. For each scenario, you may check it will remain same. From 30th September, if you start counting, from 30th September, it's 1st October, the month of November, the month of December, 3 months, and 14 days of Jan. So the time gap between these two dates is 3 months and 14 days, or 14th day of 4 month. Means if the accounting period is of 9 months, then from the accounting end date, the balancing payment will be made till 14 Jan 22. In effect, according to this rule, it's becoming 14th day of 4th month. Are you guys clear with this thing? Now apply the same concept over here. When we assume the accounting period is of 6 months, then there will be 2 installments. First installment will be paid on 14th day of 7th month. Second installment as balancing payment will be paid on 14th day of 10th month. Then again, if you start checking the time gap between these two dates, you will come to know it is exactly the same, 3 months and 14 days, or the balancing payment is being made on 14th day of 4th month. Applying to the last scenario, when we assumed the accounting period is of 3 months, the accounts were prepared till March 31st March 21, and in this situation there will be one installment which is to be paid on 14th day of 7th month. According to these dates, 14th day of 7th month is becoming 14th July 21 from the accounting end date till this balancing payment time period. Again, the rule is meeting 3 months and 14 days, or 14th day of 4th month. So from now onwards, you have to remember this rule, that what is the maximum time allowed for paying? Answer is this. But how many installment would a large company be paying? It depends on the accounting period. If accounting period is of 10 to 12 months, then 4 installments. If accounting period is of 7 to 9 months, then 3 installments. If accounting period is of 4 to 6 months, then 2 installments. If accounting period is of 1 month or 2 months or 3 months, then there will be only one installment will be paid. Can you hear me properly, all of you, please? If anyone of you is listening to me, it means there is no problem at my end. Osama, you have to change your internet connection, so my voice will be clear.
It's clear now. Yeah.
Okay, good enough. I want a confirmation from your side. Are you guys okay? We started our discussion from here with respect to the company's taxation. We divided the companies into small company and a large company. A small companies pay their tax at once within the 9 months and 1 day after the end of accounting period, but for a large company, there are installments involved. And here we started the discussion of the large company and the tax installments. We assumed multiple scenarios and also reduced the number of installments, and then concluded few points that from the accounting end date till the balancing payment date, the time period will be 3 months and 14 days. Now I'm giving you a different scenario that will be somehow different from the above discussed. From the above 4 points, 4 scenarios, you may note one thing, that over we assume 12 months. Here we assume 9 months. Here we took 6 months. Here we took 3 months. So all of these 4 scenarios are multiple of 3. like 3, 6, 9, or 12. So all these are multiple of 3. Now I'm taking, for example, if accounting period, you have to solve. I'm not going to solve. I'm giving you time to solve. I'm just creating a scenario. If accounting period is starting from 1st Jan 21 and let's say it's ending on 31st August 21. So basically, if accounting period is of 8 months now, what will happen? How many installments to be paid? You have to select from here. When these installments to be paid, you have to mark the date. Then finally, from the accounting end date, you have to check the time gap. So just solve this scenario at your own, considering the above ones. It's 8 months time period. 8 months time period is falling from 7, 8, or 9. It means for surely there will be 3 installments. For surely there will be 3 installments. First installment, second installment, and third installment will be paid as a balancing payment. Think. You will find a difference over here. Think. Hopefully, all of you have concluded your points. Now, as per the rule, first installment to be paid on 14th day of 7th month. 14th day of 7th month is 14th July 21. Second installment to be paid on 14th day of 10th month, that is 14th October 21. And as per the normal rule, if accounting period is from 7 to 9 months, in that scenario, there will be 3 installments, and the third installment date will be 14th day of 13th month. And according to this rule, it's becoming 14th Jan 22. Now, also check the last thing. Large companies pay their balancing payment within this time gap. You can see this time gap is followed in all of the above situations. But over here, if we check, what is the time gap? Accounting period is ending on 31st August 21 and the balancing payment is now be paid on 14th Jan 22. This date is fine according to the general rule, but if we apply the same rule over here, is it becoming 3 months and 14 days or is it different? Can you please check? The month of September, October, November, December 21 means 4 months have passed. Now 14th day of Jan, 14th day of 5th month. So what we can write is that now it's becoming 4 months and 14 days is a time gap, or we can rephrase this thing as 14th day of 5th month. Now, according to the normal rule, the third installment as balancing payment to be paid on this date, but when we check this thing over here, so now the taxation laws are contradicting. What should we do? Should we follow the normal as calculated over here? Should we follow this one? Answer is no. If in each scenario, you can see the normal time gap between the accounting end date till the balancing payment, the normal time gap in each scenario is becoming 3 months and 14 days. And if in any case, if it is more or less, ignore that thing. Should not use this date. What should we do now? We should count the same time gap as normally we do. That is 3 months and 14 days, or it should be 14th day of 4th month. So according to journal rule, the date will be 14th December 21. So if any case, if this is a situation, please do not follow that. Whenever the taxation laws are contradict, we have to apply the rule which is applicable in all these situations. So if this is a case, the third installment as balancing payment will be paid on 14th December 21. Why we are taking this date? Because from the accounting end date till this time, the time gap is becoming exactly the same as 3 months and 14 days. Are you guys okay? So that was the first agenda of the discussion, to tell you about, to recall you about the large companies and the tax installments, and assuming multiple scenarios, wherein in the first 4 scenarios all of the accounting periods, like for or of multiple of 3, like 3, 6, 9, or 12. But let's say in case it is not multiple of 3, it's in between multiple of 3, what will happen? So you can see that the time gap is now increasing for the balancing payment and from the accounting end date, but we crossed the increased time, and we concluded one thing, that over here the balancing payment should be made within the 3 months and 14 days as normal. All of you are okay? Hope all of this discussion is clear. I want to listen from all of you, please.
Yes, clear.
Okay. So these things are very, very, very much important. Now, how we decide whether a company is a small company or a large company? Any answers from your side? How do we decide whether a company is a small company or a large company? Would appreciate your answers. All of you are explaining well. Okay. Let me also conclude the question from my side. How to decide status of a company? In status, what we decide, whether a company is a small or a large company. A small company, any company whose augmented profits are less than the threshold amount. Large company, any company whose augmented profits are more than the threshold amount. By the way, threshold amount, the standard threshold amount for this Finance Act, the standard threshold amount for this Finance Act is 1.5 million, or we can say it as 15 lakhs. But this to be prorated due to any or both reasons. Due to any or both reasons. What are those reasons? This 1.5 million of threshold amount is available for 12 months. And if there are less than 12 months, so this amount will be prorated accordingly due to number of months. So what we can write it is that this profit threshold is prorated due to two reasons: number of months in accounting period, number of months in accounting period, and second reason. By the way, what is the second reason? When the profit threshold amount is prorated, remember? What is the second reason due to which profit threshold amount is prorated? I guess no one is recalling this point. Number of associated companies in the group Very right, Umar, your answer is right. So this profit threshold amount of 1.5 million is prorated due to these two reasons: number of months in accounting period or number of associated companies in the group. And associated companies are those companies in which the shareholding is more than 50%. Associated companies or the group companies are those companies in which direct or indirect shareholding is more than 50%. So this profit threshold is then compared with the augmented profits. If augmented profits are more than the threshold amount, then we will say the company is a large company. Why we are discussing about it? Let's say there is a further guidance. In 2020, very important point to understand now. Let's say in 2020, company status is becoming large company. In 2020, company is becoming a large company because in 2020, company's augmented profits are more than the profit threshold of this year. My question is, company got status of large company in the year 2020. Will this company be paying installment from this year or from the next year? I repeat my question and scenario as well. Company got the status of large company in 2020. Is this company required to pay installment from the same year? Yes or no? What about others? Only few are participating. Even if you are not remembering the points, you have to write your answer. No. If the company is becoming large company in 2020, installment amount is not to be paid in same year. Whether this year status will be used for paying installment in next year. Let's say the next year is 2021. For this year, regardless the status of the company, based on the previous year status, I'm not writing the status of this year 2021. We have not yet decided we have not yet marked whether a company is large or small in the year 2021, but my question is same. For 2021, is company required to pay tax in installment? Yes or no? For paying tax installment, previous year status will prevail. If the company was large company in 2020, company didn't pay an installment in the same year, but based on the 2020 status, company has to pay tax in installments in the next year. And let's say company is a small company in the year 2021. Now you will see, even though the company is a small company for this year, but still paying the tax in installments. Why? Because this year installments are based on the previous year status of the company, not the current year status of the company. This current year status, 2021 status, in which the company is a small company, this thing will be checked for before making or not making the tax installment in the next year. Let's say 2022. My question is same. For 2022, is company required to pay tax in installments or not? Even though we have not yet checked the status of the company for this year, can you please answer now? Your answer is fine, Daniel. Even though the status for 2022 is not yet checked, but for paying installments in this year, the status is based on previous year status. As the company was small company in 2021, so company is not required to pay tax in 2022, although we have not yet concluded the status of the current year. And let's say if it is a large company in 2022, but for paying tax installment in 2022, we didn't check the current year status, rather we checked the previous year status of the company. And based on the previous year 2020-21 status, we marked that no tax installment to be paid in 2022. Hope you are clear with this discussion. If you have any question with respect to these things, please do let me know. I would make you clear, and then we'll move forward and we can start discussing the second. We are done with this first one. Now, if you guys are okay, we can move forward and can start the discussion of the basis period and the related multiple things. Okay, the second discussion point is basis period rules at time of starting new business. So I'm directly using the definition as the word as basis period just to give you a reference to the individual person business. Okay, moving towards the second agenda of discussion, and this is pertaining to the individual person trading income. And individual person trading income is pertaining to income taxes. Whenever an individual person pays taxes, that is termed as income tax. And whenever a company pays tax, that is termed as corporation tax. So here we are going to discuss individual person trading income with respect to the income taxes. First situation. New business is started. Please be with me and try to understand very, very important points. New business is started. And for surely we are talking here the business of the individual person. New business is started and first accounting and date is same as fiscal year end date. What do you think? What will happen? If new business is started and first accounting end date is exactly the same as fiscal year end date, what will happen? In this scenario, what will be the implications? We know one thing, that whenever individual person starts a new business, we have to follow the basis period rules. Should we follow the basis period rules? I repeat my words, whenever a new business is started by individual person, normally we have to follow the basis period rules. But should we follow the basis period rules in this situation? Yes or no? Your answers all of you are all of the answers are incorrect. Okay, let me rephrase my question. Let me rephrase my question. A new business is started and the accounting end date is same as fiscal year end date. If we follow the basis period rules, whether there will be any overlap months and overlap profits, yes or no? I guess now my question is a bit clear as compared to earlier. Only one replied, and that replied perfectly. Okay, no. Why? Because over here, the person started a new business and first accounting end date is marked as same as fiscal year end date. If we start following the basis period rules, there will be no overlapping months and overlap profits. Number two, creating the second scenario and we'll be concluding thereafter. New business started and first accounting end date, we are talking about individual person business, and new accounting end date is different from fiscal year end date. Question remains same. In this situation, as a new business is started, if we start following the basis period rules, whether there will be any overlap months and overlap profits, yes or no? What's your suggestion? A new business is started, first accounting end date is different from the fiscal year end date, and for surely if these both dates are different, then there will be overlap profits. The next question, the next discussion is pertaining to these two scenarios, the first scenario and the second scenario. The next discussion is pertaining to the second scenario specifically, where you are answered that if the accounting end date is different from the fiscal year end date, then at time of applying the basis period rules, for surely there will be overlap profits and overlap months. Next question is pertaining to the second scenario. I'm assume accounting and date. Accounting and date, and a person has started a business and decided the first accounting and date as, let's say 30th April 21. How many will be the overlapping months? If accounting end date is 30th April 21, can you please tell me the overlapping months? Now you will think no data is given, how we can identify, but still you can identify. No, it's not 1 month. Let's say assume accounting and date. If a person has started a business and decided to prepare accounts on 30th June 21, so in that question, in that situation, what will be the overlapping months? How much will be the overlapping months? Third situation, if person decided accounting and date as, let's say 30th September 21, my question is same. What will be the number of overlapping months? Question is same for all of these scenarios, and I'm going to give you the answer in a very simple manner. And let's say if accounting, a person started a business and decided to end the accounts on 31st December 21, so what will be the number of overlapping months in this situation? Think. The simple rule is from the first accounting end date, if you want to know that how many months will be overlapping, if accounting dates are decided like this, we are assuming if a person started a new business and preparing accounts and decided the accounting end date as this, what will be the overlapping months? In that situation, a common thing is this: for all of these dates are falling in the fiscal year 21-22. Now, fiscal year 21-22 starts from 6 April 21 and ends on 5th April 22. I'm taking the first date. I'm talking about this. If accounting end date is considered as 30th April 21, for surely I can say that in this situation, the overlapping months will be 11 months. I'm going to show you how, but for surely I can say one thing, that if a new business is started and if the person has decided to prepare accounts till this time period, in that scenario, for surely number of overlapping months will be 11 months in total. If person has decided to prepare accounts till 30th June 21, so I'm taking this date from here, 30th June 21. So you should count the time gap between the accounting end date to the next fiscal year end date. To the accounting end date, from the accounting end date to the fiscal year end date. What is the time gap between these two dates? Can you please specify? Perfectly answered. That is 9 months. In this situation, you will see there will be overlapping months, which are 9 months. That's a confirmed thing. I'm going to show you the relevancy from the questions we normally attempt while practicing. I'm going to show you to make you confirm. Let's say if accounting period is of, if first accounting end date is of 30th September, I'm taking this date over here, 30th September 21. What is the time gap between these two dates? It's like October, the month of November, December, Jan, Feb, and March, 6 months. In this situation, you will find overlapping months as 6 months. And let's say the final situation, if accounting end date is like 31st December, count the time gap. So basically it's becoming 3 months. In this situation, in this question, you will be having overlapping months like 3 months. How? We can say that. How we can confirm this thing? Let me show you from questions. Just let me open the relevant files. All right. So it's a question for basis period. Business started on this date and business decided to prepare accounts for complete 12 months time period. And the first accounting end date business decided as 31st December 21. Which rule we have learned from the accounting end date till to the next fiscal year end date? So that is 5th April 22. So it's a time gap of 3 months. In this overall questions, while solving it according to the basis period rules, you can see there are only 3 months which are overlapping, no overlapping over here. Same case we marked over here. When the accounting end date is of 31st December, then there will be for surely 3 months which will be overlapping. And I confirmed this thing from the questions. Another example. Over here again, the accounting end date, the first accounting end date, although the first accounting period is of 4 months, forget about it. The first accounting end date is 31st December 21. According to the rule, we have to move forward to the next fiscal year end date. So what is the time gap? It's basically 3 months time period. So in this question, you are finding overlapping months as 3 months. No overlapping in between these two dates. Next thing, next question. Okay. The first accounting end date is 30th September 22. What is the rule we learned? From the accounting end date, count to the nearest fiscal year end date, that is 5th April 23. What is the time gap? October, November, December, Jan 23, Feb 23, and March 23. It's a time gap of 6 months. How we can confirm in this question? You can see overlap months are in total 6 months and there is no overlapping in between these two dates. So if a business is deciding our accounting end date as 30th September, for surely there will be overlapping of 6 months always. It's not happening. It's according to a predefined pattern. So the point is, whenever at time of starting a business, as we decide the accounting end date, so overlapping months calculation is according to a predefined pattern. It's not happening automatically. It's basically based on a systematic calculation. And what is that systematic calculation? So you can see if accounting end date is far from the next fiscal year end date, so there are higher number of overlapping months. If the accounting end date is getting closer to the nearest fiscal year end date, then there are less number of overlapping months. If it is getting more closer to the next accounting end date, so overlapping months are also decreasing. If it is getting more closer to the next fiscal year end date, you can see the difference on the overlap profits. Overlapping months are decreasing. If overlapping months are decreasing, ultimately the overlapping profits are also going down. So choosing the accounting end date has an effect on the overlapping months and profits. So if you want to avoid, my question is, and the conclusion point. Now, if examiner asks you, you are a tax advisor and a client comes to you and asks you, I want to start a business and I don't want higher or more overlapping months. I don't want more and more overlapping months. What should I do? Your first answer should be, if you decide the accounting end date as same as fiscal year end date, for surely there will be no overlapping months and no overlapping profits. But still, if he's asking that, if I decide 31st December as accounting end date, what will happen? How many months will be overlapping? So your answer will be 3 months. From 31st December to the next fiscal year end date, there is a time gap of 3 months. And now if he's wishing that if he decide 30th April, if he decide like it could be May, June, July, you can assume any month. So just count the time gap from the accounting end date to the next fiscal year end date. So the exact number of months will be the overlapping months. So if a person wants less number of overlapping months, so his accounting date, his or her accounting end date should be nearer to the fiscal year end date. If the time gap is far in between these two dates, so the number of overlapping months will be high. If the time gap in between these two dates will be less, so there will be less number of overlapping months. Are you guys clear with this discussion? Did you ever think like this? Did you ever conclude it like this? All right. Now, that's one dimension. That's one dimension for deciding the accounting end date. Let's talk about the second dimension. It's the first dimension. Deciding before moving on, let me write few things. Deciding accounting end date. For this decision, there are two dimensions. Two factors should be considered. From these two, one of these two we have already discussed. Effect on overlapping months and overlapping profits. That's one dimension. Let's talk about second one, which is with respect to the tax payment, or we can say it as liquidity position. So whenever, if you are a wise tax advisor, if you are a complete tax advisor, so you have to guide your client in all aspects. Deciding accounting end date, for this decision, you should think with respect to two dimensions. One of them has an impact on the overlapping months and overlapping profits. And another dimension is like the tax payment or the liquidity position. Let's say a business, okay, let me write the fiscal year 21-22 dates for 4 times, because I would be considering 4 different situations. To make you clear, to give you comparison, fiscal year 21-22 starts from 6 April 21 and ends on 5th April 22. I'm replicating this date for each scenario. keep and don't remember why we are discussing these things, to know about the second dimension for the decision of accounting end date. Let's say a new business is started. I'm just considering all of these dates as we assume for accounting end dates as at time of discussing the overlap profits. So I'm going to assume the same dates for the understanding of second dimension. What was accounting end date in the first situation? It was 30th April. It was like 30th June. It was like 30th September or December. Okay, let me change the dates. Let's say a new business is started and that business decided accounting end date, let's say as 30th June 21. Another business is started and that business decided to prepare accounts, and this business is deciding the accounting end date as 30th September 21. Another business is started and that business decided accounting end date as 31st December 21. Or we can consider all of these four situations for a single person. A client comes to you and asking you, if I decide this accounting end date, if I decide this accounting end date or third or fourth, so what will be the impact on the tax payments when I have to pay my taxes? We have discussed all of these things with respect to the accounting period, with respect to the overlapping months. So if the accounting end date is far from the next account fiscal year end date, so there will be higher number of overlapping months. If the accounting end date is nearer to the next fiscal year end date, then in this situation there will be a less number of overlapping months. But now the question, the dimension is somehow different. And let's say if a person has decided for preparing accounts to 31st March 22, so you can see, you can confirm one thing, that all of these dates are falling in the fiscal year 21-22. All of these dates are falling in the same fiscal year. And for this fiscal year, can you please tell me the tax payment date when a person has to pay tax? What is the final date for paying taxes for this fiscal year? It's a journal date. 31st Jan is a journal date. Can you please specify the year as well, Umar? Very right. Basically, individual person are also required to pay tax in installments, but over here we are talking about the balancing payment, the final installment. Although we know one thing, that the first installment is to be paid 31st Jan during fiscal year, second installment to be paid on 31st July after fiscal year, and the balancing payment. So over here we are talking about tax payment as balancing payment, which is to be paid on 31st Jan after fiscal year. So 31st Jan after fiscal year is ending on 5th April 22, and after this date, 31st Jan 23 is becoming the relevant date. And this date is for each business whatsoever is the accounting end date. That accounting end date is falling in the same fiscal year. So according to this fiscal year, for third business, the tax payment date will remain same as 31st Jan 23. And for fourth business accounting end date is 31st March 22. That is a part and parcel of the fiscal year 21-22. And if for this fiscal year, the final balancing payment date is 31st Jan 23. Why we are studying this thing? Now, let me conclude few points. If business is allowed to pay tax payment, fiscal years are same. According to the fiscal year, the tax payment date is same. But according to the accounting end date, what is the time gap from the accounting end date till the tax payment time. Can you please check? What is the time gap available for each business? Is that same or is it different? Can you please check and confirm? Yes, it is different for each business. Let's say if a person is ending accounting end date, selected accounting end date as 30th June 21. From 30th June, from this accounting end date till this time, the time gap is available for paying taxes is basically for this business is 19 months. This business has 19 months to pay tax. If we talk about second one, from 30th September 21 till 31st Jan 23, the time gap, this business has 16 months to pay tax. If accounting end date is 31st December 21 and till the payment time, the time gap is like 13 months to pay tax. And if accounting date is selected as 31st March 22, so this business has 10 months to pay tax. So there's a second dimension. Now, the conclusion is, let me prepare a table. In that table, we shall be concluding both of these, the overlapping profits and the tax payments. As we discuss the things into two dimensions, so preparing two columns for different dimensions, and somewhere we assume the accounting end date is nearer to the fiscal year end date, and somewhere we assume the accounting end date is far from the fiscal year end date for both aspects, for both dimensions. Overlap profits and overlap months. And over here, tax payment time, the second dimension. Accounting period and date is nearer to the next fiscal year end date. What will happen? And if accounting period and date is far from next fiscal year end date, what will happen for these two columns? You have to answer these two questions for these two columns. As we have discussed, I'm giving you 2 minutes time to think and conclude your option. Yes, I would appreciate if you please consider this discussion as well as this discussion to conclude these 2 points. So we can conclude these two questions if accounting period and date is nearer to the fiscal year end date. If accounting period and date is nearer to the fiscal year end date, then for example, it is 31st December 21. Till this time, the time gap is 3 months, less number of overlapping months and less number of overlapping profits. But at the same time, person will be having less time to pay tax. If it is like 31st December, if same date is replicated over here, 31st December, so it's the time gap for paying tax is 13 months. So what we can do, what we can write is that if accounting period end date is nearer to the next fiscal year end date, then less number of overlapping months and overlapping profits. At the same time, less time to pay tax. If I assume the same date from 31st December 21, with respect to overlapping months are 3 as compared to others, these are less. But if I take the same date for tax payment from 31st December 21, it's only 13 months time period is available as compared to the above situation where the accounting period is end date is far from the fiscal year end date. So that is the reason we conclude this point. If accounting period end date is near to the next fiscal year end date, then less number of overlapping months and less overlapping months. But at the same time, less time to pay tax. Second question. If accounting period end date is far from next fiscal year end date, what will happen? For surely overlapping months will be high, but at the same time, business will be getting more time to pay tax. As per the concept, as per the discussion, you can see business is getting more time to pay taxes. So we can conclude this point. Although high or more number of overlapping months, and overlapping profits, but more time to pay tax. Business will be getting more time to pay tax. Now it's basically on the discretion of the businessman. Now it's depend on the behavior of the person. If the person wants to avoid the double taxation, means the person is wishing that there should be less number of overlapping months, less number of overlapping profits. The person is not willing to pay the tax twice because overlapping profits are the profits which are taxed twice. So if the person wants to avoid less number of overlapping profits, less number of overlapping months, then our advice to that person should be that your accounting period end date should be nearer to the next fiscal year end date. So you will be having less number of overlapping months, but at the same time, you will be having less time to pay taxes. If accounting period is end date is far from the next accounting end date, on one hand, you would be paying taxes twice because the overlapping months are increasing. Ultimately, the overlapping profits would also be increasing. But then again, you would be having more time in hand for the paying taxes. And whenever we are having more time to pay tax, then we can plan our tax affairs. Maybe possible where we have more time to pay tax. Like for example, if a person has 19 months in hand to pay taxes, then that person may plan the tax affairs. For example, if in the 19 months time period, if person is planning to contribute in the personal pension on the gift date, so we know one thing that these two are the tax advantageous. Why? Because the gift date or personal pension contribution, these two are being used in the calculation of tapering of ANI, and that ANI is to be checked, is to be used in the calculation of tapering of personal allowance, and also with the contribution by the amount of the contribution of personal pension or gifted, the basic rate and high rate band limits will be extended. So these two contributions, the gifted or the personal pension contribution, is going to give you the tax benefits. So basically, where a person has more time for paying taxes, so that person utilize that time, the person can utilize that time for tax planning thing, for managing tax affairs to get tax advantages. Are you guys okay with all of these discussions? Are you guys okay with all of these discussions? If yes, then we can move forward and I can open up a relevant question from past papers. Like this question is available on ACCA CB practice platform, and this question is from practice exam 1 on accaglobal.com. If you go and check this practice exam 1, there is a question pertaining to income taxes, and question scenario is it's about the person name is Ashra, and these questions requirement are basically divided into like 4 different requirements. This question is of income taxes, the taxation of individual person, and the first requirement. Now you can easily answer for the first requirement. Read this requirement very carefully, and I would appreciate if you write your answer at your own in your notes or in your handout or anything which you have right now. It's a generic requirement. No need to read the whole scenario. It's basically a person commenced a business, and it's all about the first requirement for 2 marks is all about for the decision of accounting and date. So you, without reading this scenario, you can easily answer this requirement, and it's my request to please write these 2 points to get 2 marks, because generally, as we discussed over here, all of these things can be examined in exams like this, as you can see, for 2 marks. I will be discussing these 2 points right after 2 minutes. Okay, so when we started discussion, so normally when the accounting end date and the fiscal year end date both are same, in fact, No overlap profits, no overlapping months. At the same time, no need to apply the basis period rules. Even if you apply the basis period rules, still there will be no overlapping months and no overlapping profits. So keep remember this rule in mind. If the first accounting end date, if the accounting end date and fiscal year dates are same, in fact, we are not even bothered to check about the basis period rules. One thing that if these two dates are same, then there will be for surely no overlapping months and overlapping profits. So same case over here. State two advantages. Maybe the disadvantages can be asked. There could be anything. State two advantages, the requirement can be changed. State two disadvantages. For choosing 5th April as this accounting end date, so what should be our answer? Then our answer should be based on the discussion we had here. What will be the impact of the fiscal year end date nearer to the accounting date, far from the fiscal year date? So then our answer should relate from here. But as per the current scenario, state two advantages for A for choosing 5th April as their accounting date rather than a date early in the tax year such as 30th April. So if a businessman is preparing accounts till 5th April means same as fiscal year, the first point. Accounting date and fiscal year date same. No basis period rules will apply. No basis period rules apply. For getting second mark, we should add another point. No overlapping profits will be calculated. So that's the advantage. If no overlapping profits are calculated, just to highlight this point, I'm not going to discuss this paper. As I made this discussion, I spent like 15 to 20 minutes on the same point. So just to make the reference, I'm discussing this point. If accounting date and fiscal year dates are same, no basis period rules are to be applied and no overlap profits will be calculated. If you write these 2 points, you will be getting straightforwardly 2 marks. Okay. Anything to ask till now? Are you guys clear with all of the discussions? Okay, now I'm moving towards the final agenda. By the way, we have other 2 discussions. First of all, the business asset disposal relief and the investor relief. I will be discussing, but in the next session, in tomorrow's session, I'm not skipping. I will be discussing these 2 in tomorrow's session, but in the remaining time, I would appreciate if we start attempting practice questions. Now, we have discussed multiple things. It's time to practice questions now. Basically, I have section A and B type questions, and these questions are in total 45 questions. And considering time, we cannot complete all of these questions in today's session, but we'll be practicing more and more questions in the remaining time. But what will be our pattern for attempting all of these questions? I will be giving you time for solving each question. First of all, you will tell your answer, then I will start my discussion for each question separately. So starting from the first scenario, this scenario relates to question number 1 to question number 5. Read this scenario very carefully. There's a scenario, and based on this scenario, you will be having question number 1. Your time starts now. Your time starts now. After basically it's I'm not going to give you 2 minutes for reading scenario, for planning, for all of the things, because this question is pertaining to the first 5 questions. So I'm going to give you like 5 minutes time to read the complete scenario and also to attempt the question number 1. For next question, the question is different, but the scenario remains same. For third question, scenario is same, but question is now different. So this scenario relates to first 5 questions. Your time starts now. Would appreciate if you please write your answer after attempting this question. And I bet you would be making some mistakes. You would be making some mistake. I guess your answer will not be correct. That's my understanding, because you will be missing out some important points while attempting this question. So it's a challenging question. Your time starts now. I will start my discussion right after 5 minutes. Okay, all right. So you have concluded your answer, and some of you are telling like B, A. Ikra, you selected two options like D and B. What's your final answer? What's your final version of answer? And what about others? Didn't you select anyone? Okay, crop B. Analysis, you are like B. I'm just waiting the answers from all of you, and then I can start my discussion. Be quick, please. Dorcas, what's your answer? Janita, Muhammad, Osama, please participate, and whatsoever is your answer, just share. We are practicing. Don't worry if you're telling any wrong answer. If you're unable to decide, still you have to share your thoughts. Congrats, all of you. All of the answers are incorrect. All of the answers are incorrect. It's not B, it's not A, it's not D. Even no one by chance selected the correct answer. No one selected the correct answer. The correct option is C. The correct answer is C. Now, please be with me and try to understand. I'm not just solving this question. I'm actually linking the stories, the relevant things, the relevant topic. I'm just recalling. Then I will start doing this question. This question is pertaining to employment income and accommodation benefit. If employer provide accommodation for living purposes to employee, then accommodation benefit is calculated. And if the purchase cost of the accommodation is more than 75,000, if the purchase cost, once the employer purchased the property, if the value of the property at time of purchase is more than 75,000, so then an additional benefit is calculated named as additional accommodation benefit or expensive accommodation benefit. For the calculation of expensive accommodation benefit, we do consider a value minus 75,000 of the formula. Then on the differential value, benefit is calculated at 2% and to be month apportioned, that is x upon 12. This value could be the cost plus improvement, or this value could be the market value. Cost plus improvement is to be considered when the purchase date and the date when the property was given to employee is less than 6-year time period. Then do consider the cost plus improvement value. And if the time gap, like the purchase date of property and the date when the property was given to employee, if the time gap in between these two dates is more than 6 years, then do consider the market value in the formula. So this value could be the cost plus improvement, or this value could be the market value. When to use this cost plus improvement, let me repeat again. If the purchase date and the date when the property was given to employee, if the time gap between these two dates is less than 6 years, then use the cost plus improvement in this calculation of expensive accommodation benefit. But if the time gap of the purchase date and the date when the property is given to employee, if the time gap in between these two dates is more than 6 years, then use a market value. And the requirement was on word figure, will this benefit be calculated for this tax year? On word figure, this benefit will be calculated. So that's the answer. Can you please rectify your thoughts? Can you please rectify your answer? Can you redecide your answer? Can you reperform your calculations? Yes, Umar. It should be 198,000 market value to be used. Why? I'm going to explain after reading the scenario. Minus 75,000. So you will get a value that is 123,000. On this value, onward figure on 123,000, expensive accommodation benefit will be calculated for this year. On which value? On this value. It's not about the benefit amount. It's not about the market value. It's not the cost plus improvement. The actual requirement, read requirement very, very, very much carefully. No, why you are taking plus 7? Ikra, from where you are taking? No, cost and improvement is a different thing and market value is somehow a different thing. Living accommodation since 1st June 18. The property was purchased on 10th May 11. You can see the time gap is more than 6 years. The property was purchased on May 11 but was provided to employee on June 18. The time gap between these two dates is more than 6 years. So market value will be used in the formula. And the property was purchased for 162,000. This value is more than 75,000. So expensive accommodation benefit will be calculated and was valued at 198,000 on this date, on the date when the property was given to employee. Improvements of 7,000 were made to the property during November 15. So if the property was provided to employee within the 6 years time period, then we shall be using the cost plus improvement, which is in this question is 162,000 plus 7,000. 162,000 was the cost of property and 7,000 is the improvement amount. But altogether, this cost of plus improvement amount is ignored. Why? Because the time gap between these two dates is more than 6 years. Then we have to use the market value, and market value is directly given as 198,000. Ikra, are you clear with this thing now? All of you, please. All of you, my dears, because no one marked the correct answer. Are you crystal clear with all of these things? Umar, especially you. Swen Brown, Usama, Umar, Muhammad, Junita, Ikra, multiple. Okay, very good. Let's move forward. Okay, you attempted the first question and that is wrong. Now take my advice and apply the advice while attempting the next questions. Read requirement very carefully. Plan your answer very carefully. If you are not reading the requirement, if you are not getting the requirement, how you can do it correctly? So if you are not clear with the requirement by reading it for the first time, do read it again. If still you are unclear, do read it for the third time, because if you are unaware, if you are undecided what to do, where should we go? If the destination is not decided, so how you can go there? If you're not okay, what is to be done over here? So you for surely your answer will be wrong. So it's my advice, read requirement very carefully and then read scenario according to the requirement to find your desired things. Your time starts now for second question. 2 minutes time max. Getting the answers from all of you. And the good thing is the students who told answer, all of the answers are perfectly fine. The answer for this question is option D. If in question, if it is clearly mentioned that you have to calculate the loan benefit using the average method, so do forget about the second one. If it is clearly mentioned that do calculate the loan benefit using the average method, so no need to use the second one. Don't show that you know about second one, because examiner has specified you have to calculate the loan benefit according to the average method. Let me recall the relevant area. When the loan is provided to employee from employer at a rate which is less than the official rate of interest, or that loan is interest free or less than the official rate of interest, in that scenario loan benefit will be calculated. And if not specified, loan benefit is to be calculated under two different methods. Number one is accurate method and number two is average method. And then we decide according to the lower of. The value of benefit under both methods, where the value is lower, that is the loan benefit. The lower of accurate method and the average method will be the loan benefit. But what is the richer taxable benefit in respect of this interest-free loan for this tax year? An interest-free loan throughout the tax year 21-22, the balance amount at the start of the fiscal year is 24,200, and at the end of the fiscal year it was 19,600. Richest taxable benefit in respect of this loan is calculated using average method. So examiner has specified the method. No need to check the second one. No need to decide based on the lower of. Just decide as per the given scenario. Loan liability at the start of the fiscal year was 24,200 and it was 19,600 at the end of the year, divided by 2. Opening liability plus closing liability divided by 2 into official rate of interest into 12 upon 12, because it's the starting date, it's the end date, loan outstanding at the start and end. The resulting figure is 438. Can I ask a question? Can I ask a question? When loan benefit is not calculated, when it is simply exempt, remember? When there is no need to even apply the accurate or average method. Very right. Perfectly answered, Daniel. Best. Your answer is also correct. Anathesis, your answer is also fine. If the loan amount is less than 10,000, even the loan is given for interest free or charging an interest, no need to calculate the loan benefit. If the loan amount is less than 10,000, then it is considered as exempt benefit. And when these two methods or any of these two methods will be applied, when the loan amount is more than 10,000, then we have to go and check for the loan benefit. Your answer is perfectly fine. Very good. Third question, your time starts now. only what you want to say, Anastasia? I am not getting your, please, the question again. Okay, so here we have third question and scenario is in front of us. This question is pertaining to the, by the way, when the employer is providing any asset to employee for usage, then asset usage benefit is calculated at 20% at its fixed and specified rate of 20%. But also two other benefits are associated with the asset. That could be asset purchase benefit, that could be asset gift benefit. For example, um, there is an asset, you are using that asset since last 2 years, but now in the current fiscal year, employer has, or you have decided to purchase the same asset from your employer by paying, let's say, 500 pounds, although the market value of the asset is 1000 pounds, but you are purchasing the asset from your employer due to your employment and employer relation, you are like paying a lesser amount as compared to the market value and getting the asset. If you are purchasing any asset from your employer by paying a lesser amount as compared to the market value, then it would be considered as asset purchase benefit because you are purchasing the asset by paying a lesser amount. Or it could be second situation. Let's say the market value of the asset is 1000 pounds, but your employer has given you that asset. Your employer is like giving you that asset, take it for free, no need to pay anything. It's a gift situation. You are getting a gift from your employer. So the asset gift benefit will be calculated. Whatsoever is the situation, whether if it is asset purchase benefit or if it is asset gift benefit, in both situations, asset gift or asset purchase will be calculated. And asset purchase or asset gift will be the higher of the method 1 or method 2. Normally, in method 1, we do consider the market value and deduct the cash payment. And if it is a gift, there will be nil amount paid. A value will be calculated. In method 1, we normally use a market value. In method 2, we do take the market value when the asset was provided, and from that value, we deduct if any benefits which have already taxed in the past years or year. And then from the differential value, we deduct the cash payment. And if it is a gift, nil amount will be paid. And then a value will be calculated in method 2 as well. Then finally, we do conclude asset gift or asset purchase benefit is the higher of method 1 or method 2. So few students are marking answer. Their answer is perfectly fine. Answer for third question is greater of. Lower of options are automatically excluded because where an employee is given an asset which has previously been provided to them, how this asset is become taxable given word shows it's a gift. It's pertaining to employment income. It's pertaining to employment income. In employment income, it is pertaining to asset gift benefit. Asset gift benefit is basically the higher of method 1 and method 2. So lower options are automatically excluded. Over here, the market value word is used. Over here, the market value word is used in representation of the cost. Because a word is written as previously. It means previously market value is the cost of the asset. Previous market value of the asset is effectively the cost of asset. So Daniel, please don't be confused with the terms given because it's not the market value. It's previous market value. Previous market value means the cost of the asset when the asset was provided. Are you clear with this point, Daniel? Osama, I guess you raise the same point. Are you guys okay?
Not clear. Not clear this point. Why C is wrong?
Okay. Let me open a relevant file to make you clear. For example, yes. Let me go to the relevant page. That is a case. Asset gift benefit. It is calculated when an employee gets an asset from his employer for free. Asset could be the old or new. Higher of from these two methods will be the asset gift benefit. In method 1, we do consider the market value. Cash paid, obviously, it will remain as nil because asset got for free. A benefit amount is calculated in method 1. In method 2, we do consider the cost. From this cost, we deduct the any benefit which are taxed to date. Let's say an asset is provided in the fiscal year 18-19. Asset was in use for the next fiscal year as well, and in the fiscal year 2021, the asset remained in use for 9 months. From 6 April 21, 9 months are ending on 31st December 21. So let's say employee used the asset for 9 months in the fiscal year 2021. So this year the asset used completely, this year asset used completely. So we have to calculate the asset usage benefit for each year separately and for asset usage for the fiscal year 2021. So asset being used for 9 months. So all of the values will be deducted from here, means the benefits which are taxed to date before the gift. Here the word cost is replaced in that question with the previous market value. Here the word cost is being replaced with the previous market value. Previously market value is basically the cost of asset once provided to employee. From this value, we have to deduct the benefits which taxed to date, means against usage of asset, if any benefits have already taxed in past. From this value, we have to deduct the cash paid, but for surely as it's a gift benefit, nil cash will be paid, and a benefit amount will also be calculated over here. Then finally, we'll say the higher of these two will be the asset gift benefit. Are you clear now, all of you, please? Applying the same over here, let me show you. Yes. First of all, I cross the lower of things because for asset gift or purchase is the higher of. The greater of market value at the date the employee is given that asset. Given means we are talking about the gift date. Given means we are talking about the gift date because I mark the same thing here. So I'm marking same thing over here. So it's a market value at time of gift. Higher of market value, and number two, the market value less any amounts previously assessed as benefits. We deduct these values. Osama, we don't add these values. So the difference in A and C is deduction. So as I showed you, we deduct any previously benefits. All of you are clear with this thing? Or still have confusions? Yes, be quick, please. Okay, good enough. Next question, your time starts now. This question is somehow very easy as compared to the previous 3 questions. It's basically question number 4 of this scenario. A requirement is to calculate Richard's taxable benefit in respect of home entertainment system for this fiscal year. And over here, a home entertainment system since 1st November 21. Okay, if an asset is provided on this date till the fiscal year end date, there are only the month of November, December, Jan, Feb, and March 22, 5 months. The system cost 5160 and it is provided to Richard for personal use. When an asset is provided to employee, we don't distinguish between the personal or the business use of the asset. Do consider the cost of asset, that is 5160, multiply with the asset usage benefit. Fixed percentage is 20% into the number of months the asset being used in the fiscal year, which are only 5 months. So correct answer is 430. All of the answers are correct as told by you guys. Next question, again a challenging one. For surely you would be making few mistakes over here. Few for surely will be making mistakes. This question number 5 is not pertaining to the above scenario. It's a general question. A requirement is which of the following benefits can never be exempt? Can never be exempt. So we have to solve according to the requirement. We have to be requirement specific. Okay, what about others? I'm waiting for the answers from rest of the students. Only few replied. Which of the following benefits can never be exempt? Maybe other may remain exempt. Maybe other may remain exempt, but there is a benefit which can never be exempt. No, Daniel, your answer is not fine. Dorcas, your answer is also not correct. C is correct answer. Why? Let me explain why these can be exempt. Why C can never be exempt. Meals in staff canteen, if available to all employees, then this will remain exempt. And allowance for working from home 6 per week or 26 per month, that may remain exempt. Relocation first 8,000 exempt. Access will become taxable. So these benefit may remain exempt to some extent, but after that they may become taxable. But that is the benefit which can never ever be remain exempt. Health club membership, whatsoever is a membership instead of professional subscriptions, if any other membership fee paid by employer, that will become taxable benefit for employer. It can never be exempt. Are you guys okay? Are you guys crystal clear with this theoretical question? So now you can see we till now we only attempted 5 questions. You can self assess if you have attempted all of the 5 questions correctly, so that's very good. That's it's not very good, that's very excellent. But if you have only corrected 3 or 4 or 2, then you have to perform, you have to practice more and more. So I'm going to conclude today's session. I'm keeping till here, and we shall be continuing all of the remaining questions. Basically, we have, like you can see, there are multiple questions. As I told you, we have to attempt different 45 questions from different areas, but considering time limitations, we can only attempt 5 questions for today. And I will start my discussions, my tomorrow's class, with the discussion of remaining questions. And also, we shall be covering 2 other concepts of the income taxes, which are business asset disposal relief and investors relief. So hopefully you enjoyed today's session. These video recordings and the PDF files will be shared with you guys. Don't worry. Thanks for your time. Thanks for joining this session. And would appreciate if you please join tomorrow. So for you can enhance your for like you can enhance your passing chance by attempting more and more questions. Yes, we'll be providing you the summary notes. Don't worry, we have multiple like resources to share with you guys. Yes, CGT is also there. CGT questions are also there, and looking forward for tomorrow's session. I basically do enjoy while I teaching, while I explaining things to students. So inshallah, see you in the next class tomorrow. Till that time, take care, stay blessed, and goodbye. Yes, Dorcas, I will be sharing all of this stuff. Don't worry. Take care and Allah Hafiz.